Hi there, good morning. You're watching Market Cafe on ET now. I'm Snehi Shah and with me is Shreyanshi Singh. And well, Shreyanshi, we don't seem to be dressed according to what the GIFT Nifty is implying, because as of now, a positive start and more than 100-point optic, in fact, coming in on the spot basis. Remember, we closed at the 24,770 mark yesterday, but it's all looking good as of now, Shreyanshi. US handover also looking strong, so tell us more about it.
Well, absolutely spot on, Snehi. It's right on the opposite side when we look at it. But first, let's take a look at futures then, and not much of a move coming in for futures. Whether you take a look at Dow Jones futures, S&P 500 futures or Nasdaq futures, there you're seeing a gain coming in for all of these. So slight uptick coming in for all of those. But in after hours trading, of course, you did have software company Snowflake that saw its shares drop 8% even after it beat quarterly expectations and slightly raised its full year product revenue guidance as well. So that's important to note. But in Wednesday's trading session, you did see that resumption coming in off the recent rebound rally. So that was, of course, after newly released minutes from the Fed's July gathering also indicated that the vast majority of participants at the central bank's meeting said that it would likely be appropriate to lower the key interest rates at the September meeting if data continues to come in as expected. So that's an important update coming in there as well. And investors also seem to be cheering the results that I talked about earlier. Even Urban Outfitters on the other side did also slide about 8%, but you do have investors seeming to cheer the results with the S&P 500 as well as the Nasdaq Composite posting their 9th winning session out of the last 10. When you take a look at the S&P 500's advance as well, that also brought it less than 1% away from its record closing record as well. So that's an important update coming in there for S&P 500 as well. 30 stock Dow as well posted its 6th positive day of the last 7. So good handover coming in across Wall Street. Traders are also now turning their attention to Powell's expected speech at the Jackson Hole Economic Symposium. Now that's the one that we've been talking about for quite a while, all of this week in fact. And there's hopes for further insight into rate policy. So that is why that one is in the spotlight, and traders are also currently pricing in a 100% chance of a rate cut next month as per the CME Group's FedWatch tool as well. But they are divided when it comes to how large the reduction is going to be. So that is the key update to watch out for when it comes to the September meeting. And based on this, the commentary on Friday is going to be something that the market will keep a very close eye on. On Thursday, you do have the weekly jobless claims data also that will be released. You do have Intuit as well as Ross Stores also likely to report earnings as well. So those are the numbers on the dock that are important to keep an eye on. Now, European stocks, let's take a look at how the European stock market performed, and a rebound is what we saw there as well. Whether you look at a pan-European stocks in 600 index or a 0.5% uptick coming in for DAX as well, you're seeing a rebound coming in when it comes to Europe as well, Snehi.
Absolutely, lots happening on the global equities front, and handover looking rather positive for us this morning. But with that, let's also take a look at what's been happening in the world of crude and gold, basically commodities. So let's get started. And like Shreyanshi spoke about the minutes of the July FOMC meeting, they had a role to play when it comes to crude prices as well. And let's understand why this has happened. But before that, let's see what is happening with the crude prices. A sharp sell-off in crude oil paused on Thursday after expectations of a rate cut by the Fed Reserve offset a bunch of weak economic data from the world's two largest economies, the US and China. WTI touched its lowest since early February on Wednesday after revised US employment statistics showed fewer jobs than previously reported and weak economic data from China, which is the world's second largest economy. That also wasn't looking very favorable. Let's take a look at what these indices are up to, and you have oil WTI at 71.84, so at really low levels, and Brent also at 76, so just around that 75 level. But well, yes, remember earlier in the year when we had a lot of global macroeconomic uncertainty being seen in, you had these indices go as high as 80 on both counts. As of now, Brent at 76 and oil at 71.8, almost near 72. But also let's understand now what factors have been driving all this. The revised jobs data offset support from a drop in US oil inventories. Overnight downturn in oil prices took a breather in early Thursday trade, however, as markets focused on the prospects for near-term US rate cuts. Now, the Fed Reserve appeared to be on track for an interest rate cut in September after a vast majority of officials said such an action was likely, and this is according to the minutes of the US Central Bank July meeting as well. So this is how the Fed minutes have come into play when it comes to oil prices as well. Remember, lower interest rates reduce the cost of borrowing, which can boost economic activity and demand for oil. Geopolitical risks also have some role to play here because they have also remained at the center of investors' focus, because in the Middle East, US President Joe Biden, in a phone call with Israeli Prime Minister Benjamin Netanyahu, stressed the urgent need to conclude a Gaza ceasefire for hostages deal and pointed to upcoming Cairo talks as crucial. However, you also have US Secretary of State Antony Blinken's trip to the Middle East earlier in the week. That has ended without any agreement between Israel and Hamas militants on a truce in the Palestinian enclave. So lots of factors are coming into play when it comes to oil prices. Let's also take a look at what gold is up to, because gold prices continue to hover near that record all-time high post the US Fed minutes as well, and as of now also gold at 2,548.8 so that per ounce. So that is what gold is up to. And quickly also let's take a look at what bond yields did, and US 10-year at 3.809. So well, slight uptick coming in over there, but this is after a cool off that was seen on the bonds front.
Well, absolutely, and we also have a lot of events to keep an eye on, so let's take a look at that list as well. From India, you do have manufacturing as well as services PMI data, you do have weekly Nifty expiry as well, and you do have MPC meeting minutes as well, so keep an eye on all of those. Now, there's a host of cues that you should be looking out for from the US, UK, Eurozone as well as Japan. Firstly, let's take a look at US. You do have initial jobless claims as well as PMI data sets, so keep an eye on those. And from the UK, there's PMI data along with Eurozone's PMI data and consumer confidence data from the Eurozone as well. Now, from Japan, you do have manufacturing as well as services PMI data sets that will be in the spotlight as well. In terms of corporate action, there's a host of companies that will remain in focus. So you do have Dhanuka Agritech share buyback that will be opening. On account of that, that counter will be in focus along with Nucleus Software as well, because the board will be approving share buyback there as well, and that is the one to watch out for, along with Power Mesh Projects, because the board will be mulling bonus issue for this company as well, and Fedbank Financial Services board will also be mulling fundraise, so keep an eye on that one as well. There's, of course, from Motown, there's new generation TVS Jupiter launch, so that one will also be in focus. And there's a host of counters when it comes to the last day to buy shares to be eligible for dividends, so the likes of Goldium International, Black Box, Aster DM, and IRFC, JSPL, Relaxo Footwears as well. So all of those counters will be in the spotlight as well, along with the ones that I mentioned. In terms of other events, the Supreme Court will be addressing Byju's insolvency concerns, and beleaguered Byju's is the one that has been in the spotlight as well, and any kind of commentary coming in from that addressal will also be key to watch out for, Sneha.
Absolutely. Well, lots to watch out for in today's trade, but with that, let's kickstart the coverage of our big global stories, and the big headline that market participants will be eyeing this morning is the Federal Reserve's officials inch closer to a long-awaited September rate cut after a vast majority of members said that such an action was likely. The minutes even showed some policymakers would have been willing to reduce borrowing costs at last month's gathering. The policy-setting FOMC left its benchmark interest rate unchanged in the 5.25 to 5.5% range on the 31st of July, but opened the door to a cut at the September meeting. They also noted many officials viewed the stance of rates to be restrictive, and a few participants contended that amid an ongoing cooling in inflationary pressures, no change in rates would mean that the monetary policy would increase the drag on economic activity. The minutes also showed that a dwindling camp of policymakers feared a premature easing in monetary policy could restart inflation.
Moving on then, lots of debate on how much signal to take from the 818,000 downward revision to US payrolls, the largest since 2009. Is it signaling a recession? A notably weaker than expected labour market print showing that employers added about 174,000 jobs per month, down from the previously reported 242,000, marking a 28% decrease. The adjustment represents roughly 68,000 fewer jobs each month, the largest downward revision since 2009.
Alright, well, let's shift focus and talk about China, because the Chinese government hits out at the European Union over tariffs on EV imports. This after the bloc lowered duties on several major EV makers, including Tesla. This time yesterday we told you about this, and now there's been developments on this front. Chinese officials were out of the view that EU's probe into subsidies for its EV industries have come to preset conclusions, adding that the bloc is promoting unfair competition. A Chinese Commerce Ministry spokesperson said that the country will take necessary steps to resolutely defend the legitimate rights and interests of Chinese companies.
Moving on then, and let's keep it going with EVs. Global auto major Ford has scrapped a planned 3-row EV SUV. Not just that, the company has pushed back a new electric version of its best-selling pickup, the F-150. The latest delay by the US automaker as it focuses on cutting costs to stimulate demand. Ford, General Motors, as well as other car makers have delayed or cancelled new electric models to avoid spending heavily on vehicles that consumers are not buying as quickly as anticipated. Now, the company has instead decided investment into hybrid vehicles on the back of surging sales as well.
While we are talking about Motown, it is not just maker of petrol and diesel vehicles that are facing a slowdown. Electric vehicle makers are also feeling the heat of a slowdown, especially in the four-wheeler space. Some electric vehicle players can delay the development of vehicles if slowdown persists or gets deep. Sumit Chaturvedi has filed this report earlier. Let's go across and listen into all the details.
Well, the latest data shows it is not just the petrol and diesel engine vehicles that are facing slowdown blues. EV, electric vehicles that were once a favorite of the market, are also facing slowdown, especially four-wheelers. Well, data in July shows registrations of especially e-passenger vehicles have gone down by 15%, though two-wheelers and three-wheelers, they have gone up because of the end of subsidy scheme in July, and that is why people were buying, customers were buying these passenger vehicles. However, four-wheeler passenger vehicles have gone down by 15%. Overall, if we talk about passenger vehicles, generally there is a demand crunch in the general market, but EV was doing well, but now EVs have also come down, especially the largest market share is with Tata Motors. Tata Motors has come down in July. The overall year-on-year figures, sales are down 18%, though company is launching new vehicles. Tata Curve EV has been launched, but effect of that would be visible in some other coming few months. So overall, if you talk about the market, general market is under slowdown. Four-wheelers, EVs, they are also coming under the grip of slowdown as well.
All right, thanks Sumit for that update coming in. It's time for a quick break, but when we come back, we'll take a look at how the Asian markets are faring, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets. Then in Asia Pacific, markets opened mostly higher as investors assess flash business activity data coming in from Australia, Japan as well as India throughout the trading day. You do have the Bank of Korea that has also held its benchmark interest rate at 3.5%, in line with those expectations. But traders will be watching the language that was used in its press release later to see if any policy easing is also on the cards. Firstly, let's take a look at South Korea's Kospi, not doing all that much on your screens, but albeit in the green. So that is Kospi for you. Let's also take a look at Japan's Nikkei then. That was over 1% higher on your screens. Now, Japan's business activity expanded at a faster pace in August, with the composite purchasing managers index climbing to 53 from July's 52.5. You do also have the country's manufacturing sector that swung back to growth, while its services sector saw a faster expansion coming in as well. So then on your screens, you do have Nikkei up over 1%. Let's also take a quick look at Hong Kong's Hang Seng Index then. That one is also in the green on your screens, 0.8% uptick coming in for that one. Deeper shade of green coming in for that one after that 0.5% uptick earlier in the morning. Let's also take a quick look at Australia's ASX 200 then, in the green but not doing all that much. So 0.3% uptick coming in for that one. And this was after the country's flash composite purchasing managers index in August increased to 51.4 from 49.9 the month before as well, reaching a 3-month high and underpinned by rising services activity as well. Lastly, let's take a look at Shanghai then. That one is also in the green, 0.3% uptick coming in for the 0.1% uptick currently coming in for Shanghai as well. Now back home, of course, Nifty shut shop at 24,770, and currently what we're looking at is a very good handover coming in, Snehi. So it does really look like that at this point, even with that strong handover coming in from Asia, even the Asian markets are not agreeing with the color that we're wearing.
Absolutely, it's looking quite good coming globally, and on the spot basis, in fact, a 110-point gap up is what we are looking at on Nifty spot. Futures 0.3% higher. Hi there, welcome back. Still watching Market Cafe on ET now. Now, all eyes are currently on the upcoming Reliance AGM. And while we wait for the meeting, Somit has put together a price movement chart of the stock during AGMs over the few years that went by. Let's go across to him for an analysis on just that. And Somit, good morning. Take it away.
Well, India's largest company, Reliance Industries, will be holding its AGM on August 29th. Now, the AGM expectations for this, AGM is somewhat linked to its the management's commentary that has come in the past AGM. Now, 5 years back, the chairman Mukesh Ambani had mentioned that they will do an IPO for the telecom and the retail business within the next 5 years. In 2022, the chairman also mentioned that they are looking to double Reliance Industries' market capitalization in the next 5 years. Now, for Reliance Industries to double its market capitalization, IPO or value unlocking is very critical, and this value unlocking can be done only via demerger or the IPO of the retail and the telecom business of the company, and that is what the street wants to know, and that is the most important commentary that the street would be watching out for from the annual general meeting that will be held on August 29. Apart from that, the update on commissioning of solar cell and model manufacturing plant is something that the street would want more details on. Also, what is the update on scaling up the enterprise business when it comes to the telecom segment, and how they are looking to re-enter the quick commerce business, and any updates on the consumer brand business when it comes to the retail segment would be something that the street would want to watch out for from the August 29th annual general meeting. Now, in the past AGMs also, we have seen some big ticket announcements coming in from the company, because of which there have been some good share price moves in the past. In fact, in the 2019 AGM, when the company had spoken about the deleveraging tactic, on the AGM day, the stock price had moved nearly around 10% odd. But if you look at the pre-AGM move, we have taken the 10 days move, and 4 out of the 8 past AGMs, if you look at, the share price movement has been kind of negative. On the AGM day, 6 out of 8 times the share price movement has been negative, and post AGM, 3 out of 8 times the share price movement has been negative. But do remember, it is the last 3 consecutive AGMs where the share price movement has been negative post the AGM has been completed in the next 10 days. So it would be interesting to track how Reliance Industries share price moves this time. So far, the share prices have gained around 2.5%. It would be important to track how it moves around on the AGM day based on the announcements and post that as well.
Interesting indeed. Thank you so much for joining us with that update coming in. So in anticipation of big ticket announcements as well as commentary, that AGM will be key to watch out for. But moving on then, speaking at the 165th Income Tax Day celebrations, Finance Minister Nirmala Sitharaman sheds light on the importance of India's growth trajectory in the next few years. She also urges the taxmen to adopt taxpayer-friendly approach while collecting dues. Listen into what else she had to say then.
I strongly encourage the CBDT to see the best practices which happen globally, the emerging areas in which we need to learn a lot more, and on international taxation assessment, we need to also get a grip of how things are moving all over the world. So I think these next 5 years are going to be very critical in the growth of India. The aspiration is by 2047 we become a very developed country, for which our Indian citizens, our people, will have to be a lot more empowered. They should have a lot more opportunities for creating better economic environment for themselves and for their families. The department must exercise its powers judiciously, ensuring that taxpayers and businesses are not subjected to unnecessary harassment. Tax authority, the authority that is vested in our tax officers, is meant to ensure compliance and not to create fear
All right, that's the word coming in from the finance minister. Let's shift focus, talk about the railway space, because railway's big focus is to improve and enhance passenger travelling experience. And in keeping that objective in mind, Railways is now planning to roll out 15,000 modern sleeper coaches in the next 3 years. The tender for the same is likely to be issued soon, but sources suggest that this will not be a single tender, but it will be issued in phases. My colleague Samir Dikshit is joining us with more details on this. How many tenders are expected, and by when are they expected to be rolled out? Samir, tell us about all of that.
Railways eyes a big focus on the passenger-centric train, but we are getting to know from our sources that Railways will be rolling out 15,000 sleeper-based coaches in next 3 years, and the tenders for the same is likely to be rolled out very soon. But sources have indicated that the tender will not be in a single go. The tender for the 15,000 sleeper-based coaches will be rolled out in phased manner. Some tender will be having a quantum size of around 500 sleeper coaches, whereas some other might be having a 1,000. So different size of tenders will be issued, but the larger goal is to roll out 15,000 sleeper-based coaches, and the composition will include both AC coaches as well as non-AC coaches. So with these sleeper-based coaches, Railways plans to come up with more and more trains that will be not just Amrit Bharat train, but it will also include Vande Bharat trains as well. So this will provide a big opportunity to the players like BEML, Alstom and several others to come forward and take part in the tendering process and can also back the order as well. Now, the quantum of the tender will be somewhere around 30 to 35,000 crore. This is because one LHB coach cost somewhere around rupees 2 crore. The manufacturing cost is around 15 million rupee to 20 million rupees. So this is a big tender size, and this will definitely help Railways to roll out to more and more trains, and this will help to transform and upgrade the passenger travelling experience.
All right, thanks Samir for that update coming in. Moving on then, the government is likely set to launch a tender for up to 15,000 megawatt of thermal power projects this fiscal year itself. The move comes amid rising power demand, as well as the final contours are being discussed with the stakeholders as well. Prakash Priyadarshi is standing by with those exclusive details. Prakash?
Yes, we are learning from our sources that the Power Ministry is likely to invite tender for 12,000 to 15,000 megawatt capacity of new thermal power projects during current financial year. We are given to understand that the ministry is finalizing the contours of the tender at this point of time, and that will be issued in phases. Along with that, we have also been informed by our sources that the ministry has held several meetings with the project developers and GenCos. Along with that, a separate meeting has held with the NBFCs such as REC and PFCs on this issue. Along with that, as you were aware that the government is planning to add 80,000 megawatt capacity of new thermal power projects by the year 2031-32, and the target is to increase overall installed thermal capacity to 283 gigawatt from 214 gigawatt by the year 2031-32. Along with that, the ministry has also reviewed under construction thermal power projects with capacity of 26,000 megawatt, and we are given to understand that out of 26,000 megawatt, 19,000 megawatt capacity of thermal power projects are likely to be commissioned during the current financial year. Along with that, sources are also informing that the government is planning to add new thermal capacity in order to meet rising power demand in the country on back of economic expansion, and therefore these preparations are being done. Along with that, if you look at the peak hour power demand is expected to cross 277 gigawatt by the year 2026 and 366 gigawatt by the end of financial year 2032.
All right, Prakash, thanks so much for taking us through that. But well, let's talk about two stocks that are going to be in focus and on everybody's radar today. And I'm talking about Zomato as well as Paytm, because Zomato is all set to buy out Paytm's entertainment ticketing business. If Zomato has signed a definitive agreement to acquire Paytm's entertainment business, this deal is going to be worth 2,000 48 crore rupees for ticketing of movies, sports and events. Remember, this is the second biggest acquisition coming in for Zomato after Blinkit, for which it had paid 4,447 crore rupees. The acquisition is expected to be completed by the end of Q2, and as part of this acquisition, roughly 280 employees from Paytm will be moving over to Zomato. The rationale behind this acquisition is to strengthen Zomato's going out business, and if you take a look at the financials, Zomato's going out business for FY26 is estimated to cross that 10,000 crore mark on the back of this acquisition, and the management says that in the medium to long term, the business has the potential to deliver 4 to 5% adjusted EBITDA margin as a percentage of the gross order value if executed well. As of now, the adjusted EBITDA margin of this business is roughly 1.5% of the GOV. Let's understand how this deal is structured. First of all, it's important to understand how Paytm's entertainment business is structured. It lies amid Paytm's parent. You have 197 Communications along with two of its subsidiaries, which is Obgen Technologies as well as Wasteland Entertainment Private Limited. First up, the movies and entertainment business of OCL will be carved out and will be transferred via a slump sale to both of its subsidiaries. Second step is Zomato will do a primary infusion in both of these subsidiaries of 2,048 crores, and this money will be paid to 197 Communications, which is the Paytm parent. And simultaneously, Zomato will also be acquiring 100% stake in both of these subsidiaries, and post the closing of this deal, both of these subsidiaries will now become wholly owned subsidiaries of Zomato. Now, how is this transfer going to look like? As of now, the Zomato's going out business is going to be continuing on the Zomato app, and once this acquisition happens, these ticketing businesses will also be running on the Paytm app for 12 months, also on Insider and Ticket News app, and eventually only one app, which is the District app that Zomato plans to launch in a few weeks. That will be the new ticketing app, and eventually all operations will move there. Let's also make sense of what brokerages have to say on Zomato. You have Jefferies View coming in, maintained a buy rating but have hiked the target price to 335 from 275. Remember, this is the highest target that has been given by any brokerage on Zomato so far. You had UBS last giving 320, Jefferies at 335 now. Valuation looks compelling to them. They see good growth forecast and ultimate margins. It's a low capital intensity business which promises high return ratio. The third year clear growth vector has been established, and this could focus on market share and can claim leadership in the ticketing business, is what Jefferies has to say on Zomato.
Well, absolutely. So that's what Jefferies has to say about Zomato. Even Citi is maintaining a sell rating on Paytm as well. But with that, it's time for a quick break. When we come back, we'll take a look at some more stock-specific news, so you don't go anywhere.
Hi there, welcome back to Market Cafe on ET Now. Let's take it across to my colleague Ansh now, who's standing by with an FNO snapshot of everything to expect in the derivative space today, levels to watch out for on the indices, as well as what FIIs did in yesterday's trade. Ansh.
Yes, let's start with what happened in Nifty actually. We saw that Nifty has been advancing from last 5 consecutive sessions, which is a very positive sign, and we are just around 300 points away from that all-time high. Also on option front actually, we are seeing some mild call buying happening at the 24,800 mark, indicating option traders are expecting Nifty to go above this level and sustain there. Whereas if we talk about Nifty Bank has been consolidating within its range actually. On Tuesday we saw some false breakout, but now Nifty Bank is back in the range, which is around that 49,700 to 50,700 level. We need to give a decisive breakout from this level to have good positive sentiment in the market for banking stocks. Now, if we talk about option front, then we are seeing some put writing happening at 50,500 strike, indicating good support base around this level. Lastly, let's have a quick view on few FNO stocks that are in focus, and we are seeing significant long build-up happening in Divis Lab, Chambal Fertilizer and SBI Life, where short build-up for Dr. Lalpath, Ultratech and Power Grid. So keep an eye on the stocks.
Thank you so much for that update coming in. We'll keep an eye on all of those counters. But speaking of stocks, let's also go across to my colleague Ria, who's standing by with an update of stocks that are likely to be in focus. Ria?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. Firstly, there are two block deals that are likely to happen today. First up is Alchem Labs, for which the founder is likely to sell 0.7% stake via block deals at a floor price of rupees 5,616 per share at a 3% discount to the current market price. For IndiGrid also, the sponsor Esoteric is likely to sell up to 17.3% via an OFS on August 22nd to 23rd at a floor price of rupees 132 per unit. Let's also talk about BEML though. So BEML has linked an MOU with Malaysia's largest rolling stock manufacturer called SMH Rail to fulfill the global demand for rail and metro. And under this MOU, BEML and SMH Rail will pool their resources to enhance the capabilities in their MRO services. IREDA is also in focus since the board is going to hold a meeting on the 29th of August to consider a fundraise of up to rupees 4,500 crores via a QIP, FPO or a rights issue. Lastly, we have two major defense stocks in focus. Firstly, there's Paras Defense, which has been granted an industrial license for establishing manufacturing of infrared or thermal imaging equipment, electro-optic systems, border security surveillance systems and other products as well. And lastly, there's Zen Technologies, which has approved the floor price for their QIP at rupees 1,685.18 per share, and the company may offer a discount of not more than 5%. Now the issue size is going to be rupees 8 billion as the base size, and if you include the green shoe option, the issue size comes up to rupees 10 billion.
All right, Ria. Thanks so much for taking us through that list of all the stocks to watch out for. Let's shift focus quickly, just marking the Asian markets again, because strong positives being seen across this front, except Shanghai. Shanghai seems to be the only index that is tanking away in trade in the red, but not much to worry about because just a 4-point cut coming in on that front. But well, Nikkei seems to be holding up well this morning, a more than a 400-point uptick coming in on that front, 1.1% higher. In fact, slight losses tapered down, not losses, pardon me, but slightly tapered down from the highest point, because as of now 0.7% higher and 270 points higher is where the Nikkei is. Last I saw, Nikkei was at 38,377, but seems to have simmered down to 38,221 as of now. Australia also holding up pretty well in today's trade, and in the green, 0.2% higher, 18 points higher is where Australia is as well. But on that note, let me also take it across to my colleague Varun, who's standing by with a list of all the stocks to watch out for on the back of what brokerages are flagging off for us this morning. Varun, good morning. Take us through that list.
Good morning, Sneha. So the first report is on Shyam Metallics, and UBS has initiated coverage with a target price of 1200 and a buy rating. They say that the company is on a high growth and transformational journey, and there is a strong earning visibility going ahead. Apart from this, they say that the market is not fully appreciating its integrated operation, and hence they have initiated a coverage with a price target of 1200, which is far ahead from the current market price. Other than this, you have Jefferies on Indigo. They have upgraded to buy from hold, and a price target has been increased from 4,400 to 5,225. They say that in the last 18 to 12 months, the company has been kept on surprising, and you can see more surprises going ahead. Other than this, if you look at Vedanta, CLSA has come out with a report. They are maintaining outperform rating with a target price of 520. They say that the strong commodity cycle and margin expansion projects to drive the upside with a positive outlook on metal prices and high dividend yield, we see risk reward attractive, and hence they have given an outperform rating with a price target of 520.
For that update coming in, and thanks for that list, Varun. That is what the verdict is coming in terms of what the brokerages had to say. But time to take a look at some more important commentary then, and extensively stock-specific chat coupled with themes to eye as well as the road ahead for earnings. Earlier, we also caught up with Sumit Nagar of Malabar Investments. Listen into what he had to say then.
Shied away from the so-called fintech and consumer tech names. No Zomato, no Policy Bazaar, at least it's not visible in the data I have. What's your view there on consumer and fintech space?
I think it's a good space, right? I think, but you to always separate from the excitement, the euphoria, to sort of the underlying hard economics, right? So in the places where you see the ability to deliver that, I think those are good places to be. So say Policy Bazaar doesn't show up, but we've owned that. But we didn't buy it at the time of the IPO because we thought it was too expensive. But then in 2022, when the markets were down, and when the stock got beaten up as there was an overhang of exiting investors, we went in and bought that, right? Because we think it's a good franchise, it's a good long-term value creator, and so we invested in that. On, let's say, a company like GoDigit, which has just recently gone public, it's not a fintech, but it's a financial or insurer who uses technology very effectively, right? And they use it in order to deliver better results to their customers, and that shows up in their economics. So companies like that we would be happy to invest in. Or say a company like Ixigo, which is a consumer travel portal, and we know that OTA is a great business model. It has worked worldwide. It will work in India as well. And Ixigo, despite being a late entrant, has become the market leader in trains. It's the number 2 player in buses, and slowly over time, it's sort of.
All right, that's the word coming in from Sumit Nagar. But on that note, it's a wrap on this edition of Market Cafe. From Shreyansi, me and the entire team that put the show together, thank you so much for watching. But as we bid you goodbye, you stay tuned to the channel because the market will take all the action ahead.
If you like this video, then like, share and subscribe to ET Now.